Hello, everybody, and welcome to our market update for the 22nd of February 2026. Glad to have you on board. As I'm recording this video, pardon me, on Sunday afternoon at about 1:30 p.m. Eastern. Let's take a look to see where we ended the week last week on that Supreme Court decision on tariffs. And of course, my social media feed is filled with opinions on what happens next. Do we give or does the government have to give back the amounts that it collected? Now, I know there are new tariffs that are being put in place, and I think that's a 150-day uh, situation where the president can enact these tariffs. I think it's up to 15% now, which, to the best of my knowledge, is the maximum amount. So this likely will take us into 5 months, about July or so, where a decision will have to be made on whether these tariffs can continue or not. I was watching a program where Scott Bessent was being interviewed, and he said it's up in the air in terms of whether the tariffs that have been collected have to be refunded. I think that decision goes to a lower court, and he said they would follow that decision. So we'll see what happens. I think a lot of that money does come back and we get more liquidity in the market. And speaking of liquidity, before we start where we normally do, I do follow the NFCI here, and this is a weekly chart. You can see I'm using a step chart here. So generally, when we go lower, there's more liquidity in the market. The market likes liquidity. The market generally goes up. And you can see if I zoom in a little bit, this is the first little bit. We had a bit of a turn here, and I think it was negated during a week, but you can see we've got this first little turn up going from 0.5. So it's not significant, but it is something that I'm watching to see if we get a move that looks a little bit like this. And that's when the market did sell off a little bit. Back here, you can see when it turned in January, we know that the market, of course, led up to Liberation Day, and oh, look at that. After Liberation Day, we get this nice liquidity being injected into the market. So keep an eye on the NFCI. Now, let's go back to the NASDAQ. Great day yesterday. This is a 150-day simple moving average, which I've been using recently. I find it intriguing, the support that we're finding at the 150-day. So one of the trades I may consider in the future is if it's inside the ribbon, we have a bullish overall trend. I would not mind taking longs here with it stop at the 150-day ATR, especially when I get volume that looks like this. Now the volume bars that don't look all that impressive recently, but I do like the volume delta here on this bar, and if we go back a little bit, back on this bar here. Now this one, you can see this one was below the chandelier exit, so we don't take this trade, but this one, do I take a trade up to the chandelier? Maybe. My preference is still, I want to be above the ribbon, but if there's nothing else in the market and I want to take a 7 out of 10 trade instead of a 10 out of 10, this is something that I would look at, combining this with the 150-day simple moving average. So right now, for me, we've got to get above at least this area here at 613. I would like to see it get above 625. And then, of course, the all-time highs before I get interested in longs. My feeling here is that we're losing momentum. And I still think we're more likely to test 584 than we are to test 635 first. So let's see if that theory plays out. I think there are still good longs to be had in the market. We're going to look at some of those in just a moment. If we go to SPY, the picture looks very, very similar. This one is not as close to the 150-day, but you can see the bounce off the ATR. So when I'm assessing support and resistance for these things, if this ATR level is above the 150, that's my first level of support. Then I've got a second level of support here. And this one, the bottom of the ribbon, in my experience, it doesn't really provide a whole significant level from the way that I'm trading and the way I've set up the velocity system here. This is more of a broad indicator of whether we're in a bullish trend or a bearish trend. So we've been in a bullish trend back since post Liberation Day. And you can see when we had that first long, it came in, look at that, right at that 150-day simple moving average. So I found this to be somewhat useful in my analysis, and I'm going to continue to keep that on my chart. My comments on the SPY, very similar to what I said about the Qs. This one looks like it's starting to lose momentum again. You can see we now have lower highs and lower lows. Now, I just want to make sure that that's a lower low. So low there, 675, 79 there, and 675, 78. So it's by a cent. And I think if you have to zoom in that much to see if it's a low by a penny, to me, that means indecision. And I'm waiting to see what happens here. We had drawn in this channel on Sunday last week, and we're still within that channel. So nothing to do here as well for me. Go over to the Dow. This has been the most impressive of the group. Similar kind of look. We peaked at around 505 a couple of weeks ago and was losing a bit of steam. This one looks the best of the three we've looked at so far for more bullish action, but it's not something that I'm overly impressed with right now. IWM, similar to the Dow, except we hit these highs back earlier in the year on Jan 22nd. So there's a pivot high there, lower high there. This one is a little bit more indecision. It's a higher low. So this one to me looks even messier than the other three that we've looked at. So nothing for me to do here on IWM. Going over to gold. And how often do I do that? Pick up gold Canna instead of gold futures. This to me looks really good. I like this. We looked at this back on Wednesday when we were here right around 5,000. We looked at this back on Sunday. There was that Friday bar that we looked at on our Sunday video. And this to me looks poised for more upside. And I've told you I've liked this sideways action. I like this consolidation that's happening in gold on the bullion. If I go over to my favorite ETF that tracks the big miners, that looks even more impressive. So there's our re-entry there at 62.79, a little bit of a move up. Now, just to recap, when I get short signals that are above the ribbon, it can happen once in a while depending on the volume, but it's rare. I do not look at those short signals. I need to be looking at short and short re-entries only below the ribbon, and boy, we've got to go really far back, somewhere probably in this area here. So when I get a re-entry, my rules for my stop losses get even tighter. So that exit add-on is the exit on this position here. So this one that opens at 45 and change, the exit comes right around 56 or so. And then we get this new re-entry long. And this new re-entry long, it's right at the ATR. So I've got to make a decision. Do I want this long? I'm going to say no. And even if I had taken it, it becomes a break-even trade. There's a new re-entry long there at 61.89. And the next day we get closed out at 58.62. Would I have given myself a little bit more room for the trade to work? 62 to 46? Not in this case. No, I will accept that loss and move on and find a new trade here. 62.47 is the open, 58.67. Let's go back to what I was saying about on the re-entries. I want to tighten my losses even more. Stop loss. So when I look at this trade here on ETFs, I'm looking at no more than 3% on the re-entry. So on this trade, it's very likely that I would not have taken, this trade here. It's just a little far from my risk tolerance. And I talk about this often in the training sessions that I do. My risk tolerance is different than yours. You may be much more risk inclined, or you may be a little bit more risk averse than I am. So you've got to make a decision on whether this fits your trading style. For me, this is a little too much risk for you. I think there are enough trades out there in the market that I can find the right one for me. But if you have a bias towards the upside on the miners and you think earnings are going to be fantastic, then this could be the right trade for you. For me, it's a little far to take on a re-entry. On the first entry, which comes in there. See that main long that shows up there? Now, this is going back to 2025 January, so about a year ago. This main entry, this is where I'm willing to take a little bit more risk. So 2264. And even if I look down to see where the stop loss is, this is my trade right here from 2252 to 2155. Now, some of you who have watched the presentation before would say, but it hasn't broken a previous pivot high, and you'd be absolutely right. With the stop loss the way it is, I may start a position, but my real position would be started there. So there's that previous pivot high above the ribbon. And when I get this move above the ribbon, and then I put my stop loss from 2360 down to 2229. I may even give it a little bit more room to breathe at 2176. This is technically my the right trade for me. This one I may consider a long here or starting a position here. To me, this is a little risky than this trade. Where are we? This trade there or this trade here. Okay. So that's the way I'm looking at this. And as I've said to you, I'm not interested in just picking up a dollar or two. I want from 20, whatever it was, 23. I want to be in this trade, maybe some ins and outs as we're going up. I want to be in that trade from 25 to 63. In fact, I've held XGD for quite some time and looking like a genius now, but it was for the longest time not really doing a whole lot. So if we go back, you can see not really doing a whole lot for, I would say, years. And then gold starts to move, and XGD all of a sudden starts to feel the love. So that's where I am on XGD. On SLV, I know Richard had brought this up saying that the Chinese market is starting to get back to business on Tuesday. So the cash market there certainly has an impact on what happens in the futures markets as well. The futures markets on COMEX, I've always said, a little bit easier to manipulate than the cash price of silver. So here, I've got to see it get to 82 as my first target. And it looks like we actually may get there this week from 76, excuse me, to 82. So if we get there and we get a turn on the ATR, I may be looking to add to the positions that I currently have, the positions that I currently have are a caller on SLV and shares and a protective put on PSLV. So PSLV, for those of you that are not familiar with it, and Peter was explaining this to the group, PSLV is really a bet on physical silver. It's a little different than SLV, which incorporates silver futures, but this is actually segregated physical silver that's held at the Canadian Mint, to the best of my knowledge. So I like this because I'm bullish on the physical price of the metal as opposed to what I can get in the futures market. So no changes for me on PSLV or gold. Most interesting chart for me this week is this one here. And I think you'll see why once I start drawing in the trend lines. So if I take my trend line and draw it in like that, to me, this wedge, pennant, pattern, flag, whatever you want to call it, is very, very interesting. Bitcoin after the big move down and then the recovery really hasn't done a whole lot. So once we break out of here, if we break above 68, I need to see it above 72 to get somewhat interested in longs, but I'm more interested in a short here because we're in a bearish uh, trend right now. There's our last re-entry back at 90. We're down to 67 now. So if you've been taking profits along the way, you've done extremely well. Prior to that, our main short was back here at 109. And you'd still be in that trade today at 67. So if I get a break below this wedge, I'll get more interested in shorts. If I get a break above, I need to see a little bit more before I get interested in longs. Okay. Peter had brought up Endeavor Silver, which was my favorite of the group. I couldn't get the option strategy filled on Friday. What I wanted to do was buy the $10 call for March, sell two of the 1750 calls for April, and then buy a 22 or 25 just for protection in case the price on this goes crazy. I couldn't get it filled at the right price. I had a price in mind. It did not get hit, so I'm not in that position, but this is my favorite of the group. On a reentry, I violated my own rule. This is a little outside my risk tolerance area, but I did like the fact that the options premiums had been inflated because of the move on Friday, and I wanted to capitalize on the options premium. So more and more, and I've said this before, more and more, it's less about going long and short and more about looking at the probability distribution and where I want to end, where I want to be on that chart. Do I want to sell options? Is there a rule that can be bent but not broken? Because the price of the options is appealing. So that was the play here. It did not get filled. I'll keep an eye on it to see if there's something else to do next week. Nucor was a trade idea from last week and just barely hanging on, but hanging on nonetheless. So the entry was back here on that Friday bar at 183. We did get to 187 or so. And I really do like the support that it finds at the ATR. And when we close above the ATR, this to me is a bullish look. If it gets closed below, unless it's a gap, it's going to be a very small loss. But when it starts to move up, like it did in this case here, you see that test on the ATR? From 173, we get to about almost 200 before we get a bit of a pullback here. So I do like, and this is not a trend bounce, only because of volume. So there you'll see trend bounces like, let's see if there's one on this chart. There's, when you get a move below the ATR, but a close above, and there's enough volume and enough of a volume delta that supports a bullish thesis, you'll get this notation here, which is a trend bounce. So we've tested a support level. We've tested it successfully. And then we go from 140 to a high of 151 or so. And we get closed, I think, right around the price where we got in. And then our next long comes in there at 143 or so. And you'd still be in that long today at 180 or so. Okay. So Nucor, not a whole lot to do. Watchfully waiting. Oil, I haven't looked at in some times, only because it really has been out of favor, but I'm starting to get a little bit more interested. This is one of those beaten up assets that I think is about to start making a comeback. If we can get above this area here, and especially if we can get above all of this mess in this area. So if I draw a chart across the mess, call it 70. I do like the fact that we've come back, we've tested some support areas, support levels here, and held. There's that 150-day. I beg your pardon. Excuse me. There's the 150-day. We've tested, found support, and continued higher. I'm a little bit more bullish on oil than I was about a month ago. And of course, the big names. Exxon has already had the move and now starting to come back. Oxy, we had talked about. Oxy now starting to move. This is something that Berkshire had accumulated over time and didn't really do anything until recently. Conoco, looking a little bit like Exxon here. And Here's the bar that I wanted to show you. No, it's not that one. I wanted to show you that when you get moves that look like this, and then on the highs, you're not getting a constant push from buyers that are coming in. A lot of the times it's sellers looking for liquidity and cashing out, and you see the price starting to come back to the support area here. We'll see examples of that as we keep going. Chevron, very similar look to Conoco. Nothing for me to do here. Although I would start looking at crude oil futures and crude oil ETFs as we go forward. Looking through our list of ETFs, I've got a whole variety here. There's biotech, not doing too badly. Medical devices, still struggling a bit. See if we can get above this level here. Nothing to do either long or short. Sorry, let's go real estate next. 43. Let me get rid of these drawings here. This one has broken out of a bit of a channel here, but this one is a little more difficult to play longer term. You can see all of the ins and outs. I don't want to take part in that right now. Healthcare, XLV, and we had drawn in some of these drawings months and years ago. That's a nice cleaner chart. So there's that move above on the 25th of October, and we're still in that trade long. Transportation is, to me, the most interesting here. And this long here, 104 down to 99, it's not bad. It's not bad. I would look at the transportation sector a little bit more closely next week. XLU, XLP, the financials, the US financials have really pulled back. The reason I said US is because I'm going to show you the Canadian ones, which look very different. So let's keep going through that list here. These are some of the currency ETFs. And I was playing around with the velocity scanner on the weekend. I downloaded a list of every company publicly listed in the US that has more than $1 billion in market cap. That's more than $1 billion in market cap. There were 4,400 of them. And I said, okay, let's put the scanner through its paces. It actually did the whole list without timing out, which was impressive. So I think it took about 6 minutes to do all 4,400 names. I can share that list with you. I'll do another scan tomorrow before the market chat, and if you'd like that, I can share that list with you. As we keep going here. So SQQQ, which is the leveraged inverse NASDAQ, is something that I'm in as a hedge. This is something I'd look at too. This seems like it would be a little bit easier to deploy in terms of options pricing and stuff, because this is a $35 stock versus SPY, which is just about 700 or so. Even if I were to, when I'm looking at puts, I think I may look at SH. Of course, there's a little bit of slippage here because of the inverse nature of this product here. Okay. I'd mentioned to you Canadian banks. Look at this ETF. So this is just the major Canadian banks in here. When we get this move above the ribbon back in April, look how clean this is. Very few ins and outs. Yes, you get some re-entry ins and outs, but the main positions are, you're in these for weeks and months. This also pays a dividend. I think the yield is about 3% or so. But this move here and the most recent re-entry long at 59.32, and if I'm using a 3% stop loss, I'm in that zone. The options on this, the implied volatility on these options, I think is about 14% or so. It's very, very low. And when you get a sustained move like this, those options really start to cash in. In fact, they have 2029 leaps, and I'm actually considering buying the shares buying a protective put, collecting the dividends along the way, making it almost a risk-free trade, other than, of course, the opportunity cost of the funds being tied up. And that's what I'm looking at. If I'm buying the shares and buying a 50 delta put to protect it, my net delta is 50. Yes, I'm going to be collecting dividends along the way, but can I still get the move of a 50 delta? Uh, can I still get a 50 delta move by just buying the call option and keeping the other money aside and deploying it somewhere else, or even deploying it into a fixed income product, which will give me approximately what the dividend will return? So these are the kind of arguments that, yes, when it sounds on the surface, it'll sound like it's risk-free, but really there is a risk. The risk is similar to what is happening now if you're holding just cash, is inflation is starting to eat away at that cash. So if the money's not growing, you're actually losing value, losing purchasing power, I'm sorry, as you're just holding this. So sometimes you get a situation where the call option premiums or the call option implied volatility causes the premiums to be so depressed that it makes sense to buy just the calls. Other times, I would look at a protected put strategy and collect the dividends along the way, knowing that the worst I can do is break even or have a very, very small loss. So it's that asymmetric nature of the trade that I'm looking at more carefully. ZEB is one. The other one, this one to me is a little bit more risky. I'm in this one. The problem with some of these smaller names, now this is, I've mentioned this before, this is a split corp. So that means the dividends on DFN, the common shares, are reliant or depend on whether the combined price of the split corp is above, I think it's $15 is the exact number. So this is at 780 right now. DFN preferred shares are trading. Let's see if I can find it here. Pref A trading at about 1040. So it's not exact. It's the book value, but the price on uh, the listed shares is a good approximation. So 1040 plus 1040 plus 780 takes us to about 1820. So we're still well above that $15 mark. So this one, 780 right now, and it pays a dividend of $1.20 a year when it pays. And that's important to note that. So 120 on 780 is about, what is it, about 15% or so, maybe a little bit more. Let's check. So 120 on 780, yeah, 15.4%. So yeah, you'll collect the dividends, which I've been in this for quite some time. I did close out part of it on, where was that ugly bar? It was this one here, back in Feb of this year, because this is not, uh, this was not something that I was expecting, but with these split corps, you've got to be prepared for a little bit more risk. Nobody's just going to give you a 15.5% dividend without some additional risk. But you can see when we get into the entry here or the re-entry here, it's at 6 and change. So you've been collecting the 10-cent dividend every month in addition to the capital appreciation as well. This unfortunately does not have options. What I have looked at is to help myself sleep better at night. And just to go back and explain this bar here, this was another offering that they did. And when you're a common shareholder, yes, you can vote on these things, but if the board wants to pass a resolution that they're going to do another offering to take advantage of an increased share price, there's very little that you can do. So you can see the pullback here, but then we grind higher, and now it looks like another long position here. So that's DFN. Now going back, I just wanted to share one thing with you, that ugly bar that we looked at. So while we did open a lot lower here, so close on the prior day 595, and we open that day 503, so down about 20%, a little bit less. But look at the volume that came in, and more importantly, look at the buyers versus sellers. So this was encouraging, and I'm keeping an eye on these bars here more so than this. And when I get a situation where the volume is more than usual, but the delta is more than usual, it gets my attention. Okay. So that is the Canadian banks. And I think if you look at each of them individually, they'll likely be looking like ZEB and DFN. There's Royal. Go to TD. TD doing great. CIBC, I think, is doing great as well. CIBC off to all-time highs, it looks like. And I was talking to a friend of mine whose one of his parents worked at CIBC for, I want to say 35, maybe 40 years. And when she started, I think stock-based compensation was not as complex as it is today. And I think there was an opportunity to either buy shares or you would just get shares as a bonus or as part of your retirement. She never did anything with them except hold on to them. And a lot of you, if you go back and review and research what's happened with the Canadian banks, it's very rare that you go wrong holding Canadian banks. They're so highly regulated, and there are only 5 or 6 of them that they really are a significant part. I would say they're almost too big to fail. So yes, do they have blips along the way? Of course they do. They all will. I was just curious to see what happened back in the great financial crisis. So from high to low during the great financial crisis, yeah, I mean 61%, that's a significant pullback. But they managed to stay in business, and from that $20 price since 2009, 16 years, they are up about 6x since then. Royal, I think, is even better. Let's take a look at RY. So there's the monthly there from the high prior to the GFC to the absolute low. That's down 61% too. But since then, from 22, you're currently trading at about 172. So this is an 8x. So 8x for Royal, about 6 for CIBC. I think TD is going to be about the same as well. So Canadian banks generally for me have been rewarding. All right, that is it for us. We are back tomorrow at 1 p.m. Eastern, so in about 23 hours from now for our next market chat. We hope you can join us then. In the meantime, we always wish you profitable trading, the very best of health. We'll see you then.